were very happy at Aldar to be recording 5% growth in our gross profit margin. There's a couple things underlying that strong performance, we believe. The first is a 40% increase in our second quarter gross profit contribution coming from our IFRS 15 revenue that we generate from our off-plan home sale business as we progress construction on site and continue to sell successfully into the market. Secondly, we're also seeing a very resilient performance coming from our asset management business. So our rental portfolio into the Abu Dhabi market, down about 2% quarter on quarter, but a very resilient performance against a backdrop with a market which has some challenges.
You mentioned the Abu Dhabi market. There's been some concern about rental slowing down there, and that could potentially impact your rental growth targets, at least in the short term. How much of a concern is that for you?
We're tracking on target to our guidance of 1.6 billion dirham of net operating income from all our recurring revenue assets for 2016 or for 2017. As I said earlier, we've got a very strong portfolio of assets, probably the best portfolio of real estate assets in Abu Dhabi, and we're showing strong resiliency, and we're outperforming the other assets in our respective asset classes within the city due to that quality.
You are, of course, very active in retail as well. Any signs of weakness there?
Well, again, going back to the fact we've got a very strong retail portfolio. I mean, Yas Mall is our flagship asset, 225,000 square meter super regional mall on Yas Island. Again, experiencing very good footfall. I mean, we had one of the best sales events we've ever had at this Eid, where we saw over 250,000 people come visit our mall over the Eid period, showcasing how people are really voting to come to our strong retail assets. And that's boding well for the retailers who are tenanting our retail assets.
Diversification has been a very big buzzword for Gulf countries here in the region. I just wonder, with countries like Saudi Arabia announcing that they also want to diversify their economies, make a bigger push into tourism, is there room for everyone here, or do you worry about the competition? Can everyone pull off what the UAE, what Abu Dhabi, what Dubai have actually done?
Yeah, I think absolutely. I think when you think about the tourism offering in Abu Dhabi, it's relative and it's particular, and I think the government has done a very good job, and the various private sector investors in this space have done a very good job consistently investing into a very special asset base here in Abu Dhabi. So in particular on Yas Island, which is our backyard, we're very happy to see a recent announcement from the government to invest a 12 billion development plan at Yas South, which again starts to double down the investment into Yas Island, but also into strong leisure infrastructure. They're building a strong concert venue there, which is going to complement the existing F1 racetrack, which is going to complement another theme park that the government's building to be delivered in 2018, the Warner Brothers. And we think this is showing to us anyway consistent, proactive investment for the government into their stated areas of non-hydrocarbon economic growth, and that's the leisure space in Abu Dhabi.
So how are you financing these future projects? Is it still a mix of loans and bonds? Would you ever change that mix?
Yeah, we've got a very clear debt policy in place, and we're very fortunate to have a fortress balance sheet. So we are very open on our debt policy, 35 to 40% gross debt as a percent of the value of our recurring revenue assets. And with about 6 billion dirham in cash on the balance sheet, along with 5.5 billion dirham of debt, we're in a very solid financial footing to fund our future growth plans.
I believe you refinanced your debt last year. Would you look to refinance again?
We've got about 3 years overall debt duration across our portfolio. We've got a Sukuk coming up for maturity in December of 2018. And we're monitoring the markets for refinancing opportunities, but nothing to report on debt refinancings at this time.
We recently saw Emaar announce that it would look to float part of its development business. And when asked if other companies might follow the same example, the Emaar CEO actually specifically cited Aldar. Is this something that you might also consider?
Well, we're highly focused on how we organize our assets, and we're focused on maximizing value for our shareholders. So we're in a fortunate position now from a financing standpoint that we don't need to do any sort of corporate actions to raise capital. We're very, very well funded. So we're constantly reviewing the way we present our assets to the market.